Hello and welcome. My name is James Kelly Sr. I'm from Kelly Research Training and Technology, or KRTT.com on the internet. I'm recording this on the west coast of North America, actually in Canada, on Wednesday, August 17th, late in the evening, and the markets have been closed for several hours. It's a presentation that is going to be posted on our BBTL blog, which can be found at bullbeartrendlines.blogspot.com. Before we begin, I just remind everybody about our intellectual property and naturally a disclaimer. Although we're talking about investments and money, please be responsible for your own investment decisions and don't take risks that you shouldn't. This is basically a presentation that should enhance your education and the financial literacy. So we're doing it basically gratis to show you what our KRTT clients get all year round. We're going to draw upon a couple of the market wizards of Wall Street and some very famous theories to try and shed some clarity on how the stock market really works, and particularly how it's working recently. As you can see from our opening slide, we have 5 topics, beginning with a little discussion. It was a profound observation about 100 years ago when Jesse Livermore said that the stock market basically is a liquidity story. Livermore essentially told us not to pay attention to the economy, don't pay attention to fundamental analysis and earnings or PE ratios, don't even pay attention to the Wall Street gurus and masters. You don't need to listen to just about anyone because it's all about the cycles and the herd and what they do with their money. Essentially, Livermore taught when liquidity flows in, the markets go up. When liquidity flows out, the markets go down. So that is what basically I'm asking everyone to remember. You can discard all of those other theories, which, although not necessarily completely wrong, they're definitely not as powerful as what Jesse Livermore taught us about liquidity. We also want to talk to you about the great master W.D. Gann. We call him the first and most famous market wizard of Wall Street. His education was profound, and he observed something that was phenomenal, that really the stock market was following very repetition patterns. Essentially, it was all about natural law and time and cycles. So this is basically an introduction into 3 types of cycles. We're going to talk about summer, seasonal cycle weakness. We're going to talk about a static cycle and even give you some insight into an astral cycle tonight. KRTT, of course, is an expert at teaching all sorts of cycles. We also want to point out with a few points on our opening slide that bear markets take place quickly and bull markets take place slowly. We'll talk about this as we get into the presentation. Summer weakness, of course, this is what Jesse Livermore just taught us to pay attention to. When people go away and basically go on holidays, including money managers and institutions, there's less liquidity, there's less volume. This is a time when stocks usually go down. Sell in May and go away. When does that liquidity return to normal? Well, basically after the September long weekend. What's missing in this market is a third leg up. You may know from Elliott wave theory that there's always 3 drives in an impulse Elliott wave. But also in nature, as Gann would say, things take place in 3s. You may have remembered that people are accident prone in 3s, but 3s show up everywhere, and so therefore we need to be suspect that natural law may be involved. Now 2012 being a presidential cycle year should be a year of stimulus. It's usually a year when the bull market can at least stay alive a little bit. We know that Bernanke and the Fed policy is perhaps the most profound reason that this market should stay afloat for a while longer. Why? Because of zero interest rates. Okay? Basically, what Bernanke has done is he's given Americans no incentive to save. Not to save. NTS. Do not save. Do not hoard. Bernanke wants you to speculate, to inflate. He wants you to buy gold, commodities, stocks, real estate, you name it, but just don't save. After all, who would put their money in at zero interest rates? 2-year U.S. bills today are yielding 0.2%. Is that your alternative? We don't think so. So think about monetary policy. Remember, liquidity and money policy does influence the stock market. That's what Livermore taught us. September will be a make or break. That's what MOB stands for, make or break. September, when the liquidity returns to normal, you'll know by the middle of September, we think, if liquidity is bringing the stock market back up. Now, we do look for some back and filling into about the first week of September, so don't be too quick to judge. Give it at least until the middle to the end of September. But if you see the market take out key levels, we're not the type of people that tell you to stay in the market. We just like to have our facts straight. So let's get on with some of the charts that we want to talk about very briefly. Our first chart tonight basically is a weekly chart of the S&P. And I just want to point out three quick things. The first thing is static cycles can be very useful. We don't have time to teach cycles tonight, but on this particular one, we're showing you a very profound static cycle that you might find useful in the future. It's a 72-week cycle. Now, KRTT uses 70 to 73 bars. Remember, cycles are not like a light switch. Basically, cycles are nested within cycles, so they are cumulative and they add up. Basically, we had a profound cycle from the high of 2011 to the low, and that was basically 72 weeks. We have another low to a low 72 weeks later. So we had a quick bear market crash. We probably should take at least 2, if not more, time periods to go back up again. As we talked about, bulls tend to be slow to mature. We're also missing leg 3 as we show. But is there more evidence? We answer yes. And the master that taught us was W.D. Gann. Gann is very famous for Gann angles. Everybody probably knows about a 45-degree angle. It's also called a Gann 1x1 because time and price are equal. Notice in the first bull market leg, which took place coming out of 2009's low, that it basically bisects the basic 1x1 Gann angle, whereas after the summer correction when we lost 17% in 2010, no one seemed to say boo. The market continued up with less momentum at a Gann 1x2 on the weekly chart. You'll notice recently that the Gann 1x3 has held the market very nicely, as well as Fibonacci levels, which we have over here on the right side. Now, wave 4s and certainly wave 5 extensions, certainly, we wouldn't want it to retrace more than about 38%. 25 to 38%, frankly, is standard for wave 4s. And down at the bottom, another great market wizard and a modern day one, Linda Bradford Rashika, taught KRTT probably 1 to 2 decades ago that momentum precedes price. Linda's been around for a long time, and we used to basically go to her training sessions way back in the 80s and early 90s. So momentum trades basically ahead of price. Momentum precedes price. You'll notice that the make or break level is also evident in momentum. So again, this makes September going to be a very interesting month. Our next cycle or chart is basically going to talk about seasonal cycles, and in this case we're going to use an S&P daily chart. It's just essentially expanded the last chart. You'll notice that there's some bright green dots and there's some dots below which say KSC. These are KRTT seasonal cycles. Now, Livermore taught us that in the summer the market goes down. We saw even a minor correction in 2009. It became a little bit longer and a little bit more complex in 2010 when the market actually lost 17%. Now, we're only down basically 12%. In the top right today, we closed at 1194. We've certainly lost about 176 points, but that's only about 12.8%. So I'm not sure why the angst is there. I think it's a misunderstanding that the summers can be weak. You'll notice in 2011 that this dragged on top in the spring and the summer took a lot longer. We think some of this could have been Bernanke and the plunge protection team protecting the market until basically after the fiscal policy arguments got settled in Washington about the debt crisis. Again, we have a 3Q system. This is basically like Gann angles, but notice that these are parallel lines, much like a regression channel using standard deviation. We've labeled them 1, 2, 3. Notice how the bottom's held in the second line, and notice how the bottom is held in the third line. Coming up here, we are day 900. This is a key cycle that we'll talk about in an upcoming slide. Down in the bottom right-hand corner here, we have make or break levels to watch for in the future. Above 1222, KRTT gets bullish. Certainly, we're cautious on high alert at about 1100 mark. And if we get below 1050, you got to suspect that it's a bear market. And here's another reason. Bull market is higher highs and higher lows. Now, you have to be careful that you compare apples to apples and lows to other lows that are equivalent. In this case, we're comparing the summertime low of 2010. We should not get below that low. Otherwise, it would be a lower low, and it would essentially be a definition of a bear market. market and a more serious correction. Last but not least, a Gann box we will draw for you again to show this market wizard Gann at his best. Here is a Gann 1x1 box of 360 units of price or 360 units of time, and basically you'll notice that the 90-degree vertical bars have absolutely perfectly called CITs. You'll also note that the Gann angles and the Gann lines drawn within this box, which again is split into 4 equal parts, have held the market. So essentially, adding it up, we've got a Gann angle of a 1x3 holding, we've got a quadrant line drawn using standard deviation holding, and right now we've got a Gann box holding. As you can see, there's lots of reasons that the market may not be over just yet. By the way, these triangles are essentially September 1st when the liquidity goes back, which is why it's going to be so important to see the market go up eventually in September. Some of you want to know about the short term. This is basically a 30-minute chart of the S&P 500 index. It's as simple as 1, 2, 3. Right now, number 1, we're at the top of wave 4. We think wave 4 essentially is completed and is going to reverse down. And reversing down is going to be the 5th of C wave. So remember that a C wave breaks out into 5 minor parts, 1, 2, 3, 4, 5. So we expect some back and filling. This will be the 5th of the C wave down. Now, if our C wave count is valid, it means another bull market leg could be coming. All the more reason to watch September. Last but not least tonight, advanced Gann theory. We will again honor that there's a lot of different types of cycles, and one of the types of cycles that a lot of people want to learn more about is astral cycles. In this particular chart, we're looking at August 25th. Now, August 25th is not only an astral cycle, it's 900 days from the bottom, and it's 1414 days from the market top of the S&P. So there's lots of harmonics. There's lots of natural law here. But one of the problems here is the square angles. You'll notice that when I highlight the angles of the planets, and basically we see some big squares here. A grand cross, another grand cross, and basically what's called a mystic rectangle in this particular software. But there's one thing not to miss, and that is Mars, which is in Cancer, is exactly 14 degrees, as well as Saturn at 14 degrees in Libra. And when I basically highlight those, you can see that perfect 90 degrees. These, my friends, are malefic planets. They are full of mischief. They are nefarious. When we have these square angles like this in such a powerful formation, they often can bring market bottoms. Remember to give this some leeway. These are not like light switches, so they phase in and they phase out. And until this 90-degree square breaks up, we think people are going to have a little bit of angst. We may see a little bit more panic. So don't fear. Use the make or break levels and all of the things that we taught you tonight. We hope that you've enjoyed this KRTT presentation. We hope that you have a great summer. We ask all of you basically to visit our Bull Bear Trendlines blog spots for our updates and KRTT.com. And we wish all of you a very pleasant trading week.